Hi everybody, I'm Adam Mesh and I'm here with Ethan Finkel, the co-founder of The Smart Money. Many of you have heard Ethan speak before. I don't know if you've ever seen him speak. So we wanted to come out here, and today was a great day to do a session because we saw what happened with the Fed. They announced that they would not be tapering. Ethan's very in the know. He's one of those guys that when I talk to him, I just want to keep hearing things. So I figure we'll do it with you. So we're just going to rattle stuff off and hope you learn from this. So we saw Fed announce today they would not be tapering. Market rallied. Why?
So basically, really for most of 2013, the underlying strength in the market has been driven by the Fed's involvement in the economy and the stock market. And we're in a bit of a funny place where bad economic news correlates to good stock market performance, because with the Fed around, we have a 0% interest rate environment, which produces no yields in fixed income instruments.
Right.
And the institutional money out there has to put their money someplace. So they're being forced into the stock market in the effort of producing yield and return. The longer the Fed stays around, the better for the stock market. Now, about a week and a half ago, we had a labor report come out, and even though the unemployment number dropped down to 7.3%, which is the lowest it's been in about 4.5 years, what drove that drop was people no longer looking for jobs. It's grown so bad in the labor market that people have stopped looking altogether. So the market saw that as bad news, but again, bad news is good for the stock market. So after that number about a week and a half ago on a Friday, we saw the market slowly drift up to 15,529 on yesterday's close, expecting that the Fed was not going to announce its tapering today because the economy is not yet healthy enough for the Fed to back away. So when we got the news that they're not going to taper, the market took off and we broke to new all-time highs today.
Question. A lot of times when news is expected and you get that news, a lot of times with earnings, specifically earnings, you hear a stock's going to have good earnings, they announce, they beat expectations, and it drops 5 points. And you're like, why? They just beat earnings. How did it drop 5 points? And then you say, okay, that was built in. It was built into the price, and there was profit taking on the news. How come today we didn't see profit taking on that news? Because if it was expected that they were going to announce this and they performed accordingly. Now, obviously, if they said, you know what, we are going to taper, the market would have really got hit.
Right.
But sometimes when you get that taper, you could still have a sell-off. We didn't. We spiked into triple digits.
Yeah.
Why do you think that was?
I mean, the market got the news it was looking for, and again, it all comes down to if the Fed is here, stocks should continue to push higher. I mean, we've seen incredible strength all year, even when we had the Syria issue, even when we had the initial announcements of the beginning of a tapering program in June. When the market sold off, we immediately saw buyers return. And again, it all comes down to the fact that the big money, the institutional money, they have nowhere else to go but the stock market. In fact, last week, a major hedge fund announced that they were returning some of their investors' capital because they didn't feel they had anywhere to put it. So the big money is backed into a corner. Most funds would never give the money back because they're collecting 2% and 20, right? They're going to find something to do with it. But this fund said, listen, we've looked around and there's nowhere where we can put it other than the stock market, and they thought it was a crowded trade.
2 and 20, by the way, if they're managing 100 million, they get 2% just from managing it and 20% of the profits.
Yep.
That's 2 and 20. You specialize in where the smart money is going.
Mm-hmm.
Big banks, hedge funds, mutual funds, large institutions. Anything you noticed today in particular about where money was being allocated on this surge?
What's interesting is, typically when you have a very strong market rally, there's two types of market environments for the institutional money class. They call it a risk-on environment or a risk-off environment. A risk-on environment, they tend to allocate toward consumer discretionary, financial sectors that tend to have quicker growth but carry more risk. And when the institutions think there's a good outlook for the economy, they're willing to take on that risk. When the institutions are a little less certain, you see them take slightly more defensive moves with their equity allocations, and they'll go into consumer staples, utilities, and maybe materials. And what we saw today, every sector was green pretty much. It was a broad market rally. But a lot of the concentration was in utilities and and materials. So that was just an interesting thing, and we'll watch the story as it unfolds in the coming days. But gold, you know, is obviously in the materials sector. We saw a big pop in gold. So institutions reacted favorably to the news, but there was also some defensive movement going on. So we'll see what that translates into in the coming days.
Can we expect that in the next Smart Money report, we'll see a focus on some of those sectors that you just mentioned?
Yeah, as soon as we're done with this video, I'm getting right to work. I'm going to start researching where the money is going, and in this week's report, all of my subscribers are going to know the next step for them.
To get access to the Smart Money, there's a form below. Fill out your information. We're doing something very special today. If you sign up for our Top Rank coaching program, you're going to get access to Ethan's Smart Money service with that. It's a complimentary gift because we want to not only teach you how to trade, but give you some great trading ideas. If you just want this service, we'll be able to do that for you also. So there's plenty of options on this special day, but that report's coming out soon, and you've heard him speak. He's really on the inside of what's going on in this market, and I found that his information has made this the best trading year I've had in over 7 years. So since we've started working together, it's been good news for me, it's been good news for our members, and now it's time for it to be good news for you. So fill out the form below today and get in on our little group here because it's having some fun. I'll talk to you soon.